We're kicking off today's coverage with the single most important macro event of the week, Federal Reserve Chairman Kevin Warsh's first post-meeting press conference, a moment that could reset near-term monetary policy expectations for every asset class on the board. Markets are already sending signals ahead of the presser. The Nasdaq 100 is down 1.90%, sitting at 29,194, while the S&P 500 is essentially flat at 7,510. Meanwhile, gold is catching a safe haven bid at 4,351.90, up 0.48%, and the VIX has dropped to 16.08, suggesting traders are cautiously positioned but not panicking yet. Here are the headline facts traders need to anchor to this morning. The 10-year Treasury yield has compressed to 4.43%, down a full 123 basis points, a meaningful move that signals bond markets are already leaning toward dovish expectations from Warsh's presser. The 5-year yield sits at 4.16%, down 119 basis points. Simultaneously, semiconductor name Broadcom received an aggressive buy recommendation from analysts today, injecting a layer of bullish conviction into the chip space even as the broader Nasdaq remains under pressure. These two events, macro policy signaling and a sector-specific catalyst, are running in parallel, creating a split narrative that complicates positioning. Kevin Warsh's inaugural press conference is not a routine communications exercise. It is a regime-defining moment. Fed chairs establish their credibility, their tolerance for inflation, and their responsiveness to labor market data in these early appearances, and markets will parse every syllable for clues about rate cut timing. With the 10-year yield already at 4.43%, bond markets have done some of the heavy lifting on pricing and eventual normalization, but equities haven't fully committed. The Nasdaq's 1.90% decline reflects that uncertainty. Growth stocks are the most rate-sensitive, and without clear dovish signaling, the multiple compression trade stays alive for tech bulls trying to defend 29,194. Let's walk through the specific exposure map. Broadcom is the standout today. The aggressive buy recommendation places Broadcom at the center of the artificial intelligence infrastructure capex narrative, and strong follow-through could lift the entire semiconductor cohort, including NVIDIA and AMD. Artificial intelligence infrastructure beneficiaries like Microsoft and Google would also gain support if Broadcom's upgrade signals continued enterprise spending on generative artificial intelligence workloads. On the macro side, the Nasdaq 100 bears the most rate sensitivity risk. A hawkish Warsh could extend today's 1.90% decline further. Treasury proxies, long-term treasuries, and TLH become buy-the-dip candidates on any dovish surprise, while the financial sector faces pressure if long rates compress further from the current 4.43% level. Here are the precise levels and catalysts to track through the session. On the Nasdaq 100, 28,500 is the near-term support line. A break below that on hawkish Warsh rhetoric would signal a more serious technical deterioration from today's 29,194 print. Resistance sits above 30,000 on the upside. The VIX at 16.08 is relatively calm, but 20 is the key anxiety threshold. Watch whether that level gets tested post-presser. CME FedWatch rate probabilities will reprice in real time as Warsh speaks, so monitor the front end closely. Gold at 4,351.90 is your safe haven barometer. A sustained rally there signals the market read a hawkish hold, not a dovish pivot. The actionable takeaway today is clear. Position for Warsh's press conference as the primary volatility catalyst, because his language on rate cut timing will either break the current tech sell-off and drive a relief rally in the Nasdaq 100 and NVIDIA, or extend the Nasdaq's pain below 29,194 if he holds a hawkish line. The Broadcom upgrade is your secondary trade, a sector-specific bullish signal that provides some insulation for semiconductor longs regardless of the macro outcome, as long as artificial intelligence capex spending holds up. Keep one eye on the 10-year yield at 4.43% and the other on the VIX at 16.08 for real-time confirmation of the market's read on Warsh. That's the full setup on today's Fed story and what it means for your portfolio. Coming up next, another major market mover you won't want to miss. Shifting now from macro market forces to a major leadership shakeup at the heart of global derivatives trading. CME Group, the world's largest futures exchange, has just announced a planned CEO transition. Terry Duffy, who has led CME Group for decades and is currently 67 years old, will step down effective March 1st, 2027, moving into an executive chairman role. Current CFO Lynne Fitzpatrick has been named his successor as CEO. This is a carefully orchestrated succession, not a surprise departure, and the transition runway before the change takes effect is a deliberate signal to institutional clients and investors that continuity is the priority here. Here are the specifics. Terry Duffy, age 67, transitions to executive chairman on March 1, 2027, while Lynne Fitzpatrick, currently serving as CFO, steps into the CEO's seat on that same date. CME Group made no indication of operational distress or activist pressure. This is textbook governance succession planning. The announcement comes against a backdrop where futures markets are exceptionally active. The VIX is sitting at 16.08. The 10-year Treasury yield stands at 4.43%, and gold futures are trading at 4,351.90. Each of those data points represents a live, high-volume product line generating transaction fees for CME every single trading session. Why does this matter beyond a routine executive announcement? Because CME Group sits at the intersection of nearly every macro theme dominating markets right now. Federal Reserve policy uncertainty has kept Treasury futures volumes elevated. The 10-year yield at 4.43% and the 5-year at 4.16% are not abstract numbers. They represent daily repricing events that institutions hedge almost exclusively through CME's rate derivatives complex. Equity index futures and options are generating direct CME revenue from elevated volatility. Fitzpatrick, coming from the CFO seat, understands the financial architecture of these businesses with precision that a pure operations executive might not. Let's name the names. CME is the direct headline ticker. Investors will watch whether Fitzpatrick's elevation is read as a modernization signal, particularly around CME's blockchain infrastructure and data monetization divisions. If the market interprets this as a fintech-forward pivot, Intercontinental Exchange and NASDAQ Incorporated, could see sympathetic positive sentiment as the entire exchange operator category gets a governance upgrade narrative. On the flip side, if institutional counterparties perceive relationship risk or execution uncertainty under new leadership, CME could underperform while Intercontinental Exchange and NASDAQ absorb redirected flow. W&T offshore crude at 75.86 and gold at 4,351.90 are both major CME franchise products, so commodity derivatives revenue remains a key watch point. What are the specific triggers to monitor from here? First, CME's earnings reports will be major venues for Fitzpatrick to articulate her strategic priorities. Watch for forward guidance on trading volumes across equity index, treasury, energy, and metals derivatives. Second, the VIX at 16.08 is the single most important leading indicator for CME's near-term revenue. If equity volatility rises meaningfully from here, futures volumes spike and CME's fee capture accelerates. Third, Treasury yield direction matters. The 10-year at 4.43% keeps rate hedging demand robust, but any sharp rally in bonds compresses that need. The transition window to March 2027 means today's announcement is a slow-burn governance story, not an immediate catalyst. The bottom line on this story is straightforward. This is a controlled, well-telegraphed leadership transition with no red flags visible in the announcement. Lynne Fitzpatrick's promotion from CFO to CEO maintains institutional knowledge at the top, while potentially sharpening financial discipline and technology investment focus. For investors holding CME, the actionable move is patience. Monitor earnings and forward volume guidance as the true test of the new leadership's strategic agenda. The broader exchange sector, including Intercontinental Exchange and NASDAQ, should remain stable. That wraps today's two-story deep dive on the forces reshaping markets right now. Full analysis is on the screen for you. If this kind of institutional-grade market analysis is what you need every day, hit subscribe right now and tap the notification bell so you never miss a breakdown. We go deep on the stories that actually move your portfolio. See you tomorrow.